Okay, well, welcome everyone. We're into the final stretch now, and we're going to end on a high with this closing debate. Welcome to the Sheldonian Theatre. This was, I think, Sir Christopher Wren's second commission, and it was finished in 1669. And it's a really special building for us at Oxford because it serves a number of purposes. The first, obviously, is a theatre, so it's the University Theatre, lots of performances here. It also serves as our parliament. So you might not know that the University of Oxford has a parliament called Congregation, and our governance is sort of organised in that way, which might explain some of the governance challenges we have occasionally. And then the third thing is this is the place where we have our graduation ceremonies. And in the room last night that you were in, the Divinity School, which is just over there, what happens is that you change your gown, you get a new gown for your new degree, and you come in and get awarded your degree. So it's a special place, and wonderful to have you here. And we're going to have, hopefully, a really fun hour and a half, and it's going to be chaired by Catherine McKenna. So I'm going to hand over to Catherine, who's going to introduce the motion.
Well, thank you very much, Ben, and I think on behalf of everyone, thanks for pulling this together. It's been really great. Welcome to everyone. I'm sure you're all exhausted, but thank you for coming. I'm very pleased to be chairing this because not only do I have no experience with debates, I stayed kind of far away from that, I also only went to LSE, so it's a big privilege to be here. All right, let's get to it. The motion before the House is, this House believes that finance sector net zero pledges will have no positive impact on real economy decarbonization. So before we start, we're going to go through House rules, and we're very fortunate to have Noah. Noah was former president of the Oxford Union.
Thank you very much, Catherine and Ben and everybody here today. Just a quick word on participation. It's strongly encouraged, but within parameters. Now, the parameters are, firstly, points of information. You might have heard the words point of information before. Essentially, it means if you have a point of information, you can stick your hand up in the air, and that applies to you as well, and say the words point of information. Now, the person speaking then has the option to either accept that or deny that. If they accept it, you make your point, keep it brief, and if they deny it, you have to sit back down. Now, in terms of what the content of a point of information is, it's got to be a correction, or whether that's of a fact or whether it's a correction of something that's an interpretation. So it can't just be, this is my opinion, or this is a question. So if you have a strong sort of counterpoint to the evidence being put forward to you, I encourage you to put your hands up and say point of information. That's number one on participation. Number two on participation, there's going to be a section in the debates where it's up to you to come and speak. They are going to be speaking for a maximum of 10 minutes, but there'll be a short break before the kind of two final speakers, where the chair will turn to you and invite you to speak on either side of the motion. So you can get thinking about what your speech is going to be. And we have agreed that if nobody puts their hand up, we're just going to stay in here until somebody does. It's only a 2-minute maximum speech, so don't worry, it doesn't need to be at the levels of perfection and insight that we're going to get from our guest speakers today, but just be prepared for that. The final thing, and this is sort of the most housekeeping-y sort of thing to say, you'll hear a bell, which will be coming from my iPhone throughout these talks. The first bell is the first minute, at the end of the first minute of the speeches that are going to be delivered. That signals that it's open for interruption and point of information. And the final bell is 1 minute before the end to show that that window is closed. So in other words, the first minute is protected and the last minute is protected. That final bell is also a signal to you to let you know that it's coming to an end. If you hear me ringing twice, it means you need to finish. That's all. I'll hand back to Catherine now. Thank you.
And good news, I have well, thank you, Noah. And good news, I have a lapel mic, so I actually don't need a mic. All right, without further ado, I want to welcome the first speaker for the proposition, Sarah Williamson, CEO of FCLTGlobal, to open the case.
Thank you very much, Catherine, and thank you all for being here. As Catherine said, we know what this motion is, but we're meant to define it. So let's just get started with that. The motion that we're here to debate is, this House believes that the finance sector net zero pledges will have no positive impact on real economy decarbonization. So there are important parts of that. We're not here to debate whether real economy decarbonization matters. Of course it does. We're not here to debate whether the finance sector has a role to play. Of course it does. We're here to debate whether finance sector net zero pledges will have any positive impact on the real world, and we say they will have none. So before I continue, let me introduce the opposition. To my immediate left, Ann Simpson, who is the global head of sustainability at Franklin Templeton and is a visiting fellow to Oxford University. To her left, Paul Dickinson, executive chairman of CDP. And to his left, Hugh Van Steenis, who is the co-chair of the World Economic Forum's Global Future Council on Finance. Now, as we begin to speak, and they begin to speak, you are going to quickly realize that we have 2 Americans and a German, and they have 3 Brits. So, we know our opponents are English, and so they have the home field advantage here. We also know there's been an awful lot of hot air in England this week. But we can't completely blame them for that, because we do understand the difference between correlation and causation. So let us get into our arguments. What is the cause of the hot air this week? The cause, of course, is climate change. And there is no question that the world needs decarbonization, and we need it quickly. This situation is dire from both an environmental standpoint and a financial standpoint. To reverse the impacts of climate change, or even to get them slowing down, it's estimated that we need trillions with a T, on an annual basis to be invested in clean energy and other sorts of mitigation in order to build resilience. And that is where the financial sector comes in. And in particular, that's where the investors come in. We need capital to make any difference here. So there are many ways for the financial sector to help reduce real-world emissions efficiently over time. There are also ways for the financial sector to make pledges without any real-world results. And net zero portfolio pledges are one of those ways to have no results. Even just a decade ago, net zero pledges were a fringe idea. Now it's all the rage, and some of the world's most notable investors are on board. The Net Zero Asset Manager initiative was launched in late 2020, has about 275 signatories. The Institutional Investors Group on Climate Change now has about 350 members with over $50 trillion in assets. And the UN's Net Zero Asset Owner Alliance is made up of 74 investors with over $10 trillion in assets. This is not to discredit the efforts or the intentions of these groups. In fact, we applaud their work on starting a conversation. But where has this conversation gotten us? Emissions continue to rise despite the pledges being made and the trillions of dollars behind the organizations that make them. So my colleagues and I want to drive real-world decarbonization, but believe that net zero pledges will not have real-world results. So we'll argue that first, a green portfolio and a green planet are 2 very different things. Secondly, that net zero pledges in the finance sector specifically have more to do with marketing than with reality, and that government must get involved to realize real change. And finally, that there are some fairy tales that you would have to believe to oppose this motion. So we know that pushing back climate change is a noble cause, but this should not distract us from the fact that net zero pledges are an ineffective and largely superficial exercise in the investment world, nor should it distract us from the fact that the real solution lies elsewhere. So let me return to the first point. Are we investing for a green portfolio or a green planet? They're not the same thing. The simplest way to fulfill a net zero pledge is by divesting and excluding dirty assets from the portfolio. In reality, divestment and exclusion leaves investors with no seat at the table and limited means of influencing change with transitioning assets. There are good reasons for divesting if something is morally repugnant and an investor does not want to participate in that region or activity. For example, many investors have divested based on principle from Russia since its invasion of Ukraine, from South Africa during apartheid, or from tobacco stocks. So let's take the case of tobacco. As an example, how has a no tobacco strategy worked in the real world? The tobacco industry still exists and thrives around the world. The only meaningful measures to curtail smoking have been government taxation and regulation. And returns to holders of tobacco stocks have been excellent. If you held Altria for the past 20 years, you would have beaten the S&P 500 on a price basis and gotten an 8 to 9% dividend on top. Or another way of putting that is you would have earned almost twice as much as holding Microsoft. So what would you think of somebody who preached divestment from tobacco and then lit up a cigarette? With the exception of Greta Thunberg and her boat, that is what proponents of divestment do every time they get on an airplane or a car. So we all, on an airplane, and there you go, exactly. Oh, exactly. That's why we believe in divestment. So, we all know one person's divestment is another person's investment. Selling dirty assets to someone else who presumably cares less about the planet than the people in this room do certainly does not help and may well be detrimental. So, divestment doesn't lead to real-world decarbonization. What about other ways to meet net zero pledges? There are lots of unintended consequences of these things. Some people are shorting carbon-intensive stocks to get to a net zero portfolio. I cannot fathom how shorting carbon-intensive stocks would help the planet. It is financial engineering at best. Could portfolios get to net zero by only investing in net zero companies? Maybe. Using carbon offsets? Maybe. But the link to real-world decarbonization is tenuous at best. So my colleagues and I will explore the pitfalls of the recent wave of net zero pledges and why it's so important for companies to have access to the capital needed to make the transition to net zero. In fact, our friend Mark Carney has observed it's the reason John Dillinger robbed banks, because that's where the money is. We need to go where the emissions are, and in many cases, it's about investing with existing actors to support the transition. So I'd like to end briefly with what is better. Investing in climate transition in a way that will have real-world benefits. We've talked about principles-based investing, such as divestment at the expense of return. There's also a positive way to invest on principle, such as impact investing, funding moonshot projects, or de-risking investments for others. The catch, as you may have suspected, is that there must be a willingness to forego some return in most of those investments. Another way to think about climate portfolios is what we call analytical, or perhaps just good investing, which is incorporating future potential carbon prices, changes in government policy, or consumer preferences into your analysis today. You know, any good investor who is buying a bridge would want to know where the water is going to be in 20 years. That's just good investing. Venture capital investing in green technology is an example of this as well. So high risk, high return potential return can make a lot of analytical sense. Again, it's just good investing. And we also think about catalytic investing, particularly for large investors. They can throw their weight around a little bit. They can create new markets or engage with companies. Both of these can be very useful and actually have an impact on real-world decarbonization. So Anne asked the question yesterday in one of our sessions, what can we do? Rather than complaining, what can we do? So we think there are a lot of things an investor can do to drive real-world decarbonization. Invest in innovation, engage with companies, invest in transition assets, invest in natural assets. A net zero pledge is taking the easy way out. It absolves the investor of responsibility for the emissions of the rest of the market, things that are not in their own portfolio. It also prevents them from being part of the real solution, which involves more risk, more appetite for investment in transitioning assets, and a longer-term vision. But a green portfolio is not the same as a green economy or a healthier planet. So there is no reason to believe that financial sector net zero pledges themselves will lead to real economy decarbonization. Thank you very much.
All right, well, thank you, Sarah. I wouldn't underestimate the Americans. I now welcome the first speaker, opposition, Ann Simpson.
Thank you, Noah. Thank you. I am British, but in America, my official designation is an alien. So I think I'm not as quite neatly in one box or another. First, it's my pleasure to offer my condolences to the team for having to defend the indefensible, which is attacking the only credible plan that the world's money has come up with. And the reason we need to bring the full force of common sense to this is there are no investments outside the real economy. Whether it's a pension fund, a mutual fund, a bank, we can't just stuff money in a piggy bank and hope something magical and marvelous happens. We have to deploy that capital into the real world in order to generate the risk-adjusted returns. So my commiserations, because you're all obviously sitting on the wrong side of this beautiful hall. Our first fearless and peerless speaker, Sarah Williamson, who is the head of focusing capital on the no, not the wrong thing, it's on the long term. Sorry about that, Sarah. Anyway, next we have the very brilliant but rather misguided Danielle Fixler, who's the founder of VentureESG. Now, Fixler fixed it, didn't she? She blew the whistle. So what we'd like to offer her a seat with us over on this side so she can help fix the real world through the investment, the deployment of capital, which is essential, along with government, technology, civil society, and all that's needed. So Danielle, there's plenty of room over here. I'm just so sorry that, I don't know, it was a mix-up, left, right, who knows. And last, and sadly least, Jakob, Thomä, Managing Director of the 2 Degrees Investing Initiative, and of course that's the temperature rise he's experiencing by still wearing his jacket. Of course we know Ben is operating on a shoestring, so they couldn't afford the speaker fee for Stuart Kirk. So we know you'll do your very best. So let me start off with this idea that there is anything you can say about a portfolio of any size or scale which is detached from the real world. Unfortunately not, unless you are a 7-year-old with a piggy bank putting your pocket money in it. Other than that, these multi-trillion-dollar commitments, pledge as they're called, maybe a little pompous to use that word, these are essentially a plan. This is about setting a plan for a destination of where we need to get to. And if you don't have a plan of where you need to get to, remembering, there is no future for finance without the real economy. We're not living in that 7-year-old's piggy bank. We have to have that real economy impact for the risk and opportunity that we need, which is part of our day job. So really, by complaining about the pledge as we set off on this very long journey, and the pledge is saying this is the plan, this is like going on a long journey with kids in the back seat. Who's done that? You can be on a train. When are we going to get there, Mum? I say, well, we've only just started. It's a long journey. Well, I know, but I'm bored. Why? Yeah, it's a 38-year journey. So, yeah, they'll be grown up by the time we get there. I get it. So let me revisit what we mean, and I have to because I've been teased about it probably not often enough, but a love of Latin, and Clara can add to this with the ancient Greek, I believe. What does governance mean? We think about this as a massive governance challenge that we have in the world financial system, where we've got to assemble in all these moving parts of finance, technology, science, civil society, corporations, and so forth. What we have here is a governance dilemma. But we need to remember that the Latin root of the word governance is gubernare, which goes back several thousand years, and it means to steer. It means to be the pilot of a ship. I will call on my wonderful colleague, the only captain, I believe, in the room, Piers Hugh Smith, to expect that one who is steering a ship needs a crew, a team, an understanding of how to navigate uncertainty, shoals, dangers, tides, currents, winds, disasters, and also to be able to change course along the way. However, what you do need to know is where you're trying to get to. So if we're going to get to a net zero economy, we need money to help us get there. So I apologize that you are on that side of the room. We'd be welcoming to all three of you to come this way. And our job here is to bring the full force of common sense to bear on the proposition, which is patently ridiculous, because if you think money will have no impact, positive or negative, you actually believe $300 trillion, which is the financial sector at large, you think that doesn't have an impact on real economy decarbonisation. It's very hard to see how we can get there without the money. And for all the reasons which Sarah rightly says. We need that money deployed into the new opportunities. We need to marshal influence to move companies from where they are to where they need to get to. This proposition is not about should we all divest, which is what you very eloquently argued against, and I would agree with you on that. But the actual proposal is not about divestment. It's not about a Pontius Pilate wash your hands strategy. It's actually about whether money matters in our transition to net zero. So for this, we confidently and positively disagree with this motion. Thank you.
Well, I guess it's on. Thank you, Anne. I want to welcome Desiree Fixler to continue the case.
Thank you very much. I absolutely agree. $300 trillion, we need to mobilize that in the right direction, right? That $300 trillion is not going to decarbonize the real economy right now. The only marker for success is reduction in absolute carbon emissions, meaning the opposition needs to prove that these finance sector net zero pledges are actually having a positive impact. And right now, there is no means to prove it. We do not have a level playing field of measurement. Right, so we don't have complete financed emissions data. We don't have complete short, medium, or long-term targets from the constituents in the net zero network. We don't have a set of data about the reliance on offsets, and we don't have full disclosure on government lobbying activity. Carbon emissions are going up, and the GFANS members continue to finance real economy, high emission activities. So as an example, the Rainforest Action Network said the biggest banks provided $742 billion of funding in coal, oil, and gas in 2021. You have Reclaim Finance this year coming out. That's some of the largest asset managers in Nizami, the Net Zero Asset Managers Initiative, continue to finance fossil fuel expansion. So at best right now, these net zero pledges are aspirational statements. They're marketing blurbs. Voluntary initiatives are not working. Let's just take a look. So I did some Google searches before. Let's just take a look at some of the statements and net zero pledges that are being said. And I don't mean to pick on them, I just randomly chose 3 banks. The first one is Citigroup. They came out to say, we can help drive the transition to a net zero economy. They didn't say we will, or we do. They said we can, in theory. Deutsche Bank came out with a statement this year that said, Deutsche Bank today disclosed for the first time data on its financed greenhouse gas emissions. Then down below it states, by the way, this is just on a particular corporate loan portfolio. It doesn't include the emissions from our bigger businesses in the capital markets and our total commitments, capital facilities. JP Morgan, our commitment means we are measuring the emissions of our clients in key sectors of our financing portfolio and are setting reduction targets for these sector portfolios that are Paris aligned. It shows like great progress, right? At considerable emissions reduction from a 2019 baseline, but it's on carbon intensity, not absolute emissions. Now, it doesn't mean that these banks or the asset managers or asset owners are bad. They're acting rational for the system they're in. We operate with short-term incentives. We're on a 90-day financial reporting schedule. Folks in the industry operate on an annual bonus. Wall Street will always go to the extreme if allowed. The only thing that curbs bad behavior or prevents societal harm is regulation and law enforcement, right? Let's just take a look. We have experience, right? We have the Bank Secrecy Act and Foreign Corrupt Practices Act in the US, and that has really curtailed financing of criminal activity and money laundering. Sarbanes-Oxley, again, that was implemented, that was passed through to prevent, to at least minimize accounting fraud. And then, of course, most recently, we have Dodd-Frank in the US, right? That was very much about consumer protection against financial fraud, bank gambling, also in the US, whistleblower protection. And so the point being here is that we need a mandatory system to force this change, to really make that 300 trillion effective. I mean, if there's one thing that we've learned over the last year from all of these regulatory and enforcement actions against greenwashing is that we need to be evidence and data-based. Show us how these net zero pledges, these very vague and incomplete statements, can make a positive effect. Thank you.
Thank you, Desiree. I now welcome Paul Dickinson to continue the case.
Thank you very much indeed, and what a pleasure to be with you here. And thank you for the introduction, Sarah. But I'm not executive chair, I'm chairman. I'm founder chair. And it's a gender-neutral title chair, unlike every single painting I've seen in every single room I've been in for the last couple of days. So look, what's going on here is we've had some interesting arguments, but I agree with most of them, but they've got absolutely nothing to do with this particular proposition which you are crazily putting forward. Sustainability, we can be mysterious about it, but basically, what does it mean? It means problems the government can't fix. When it's COVID, they lock us up in our homes. When it's Ukraine, they send missiles. When it's climate change, it's kind of like, they can't do anything. Now, that's because we're going to need a whole society thing. Government has to fix this, we agree, but government doesn't exist, on the moon, we have to wait for them to sort of send the laws. We create those laws together. Fossil fuel money, we know, has kind of put Trump in, and he's changed the Supreme Court, and the United States is turning into Afghanistan, really, in terms of Roe versus Wade. But the point is that we're going to have to kind of fix that. Pledges alone cannot do it. We need government taxation and regulation. We all know that. That's the kind of heart of this whole conference, to be honest with you. Now, the finance sector's net zero pledges show this powerful sector recognizes the seriousness of the problem. That's what this whole proposition is about. Are they wrong to come out and say that they recognize that they have to do something enormous and they can't do it today? Are they wrong? Is our financial system wrong to have aspirations? I don't think so. I think that aspirations are what drive humans forward and actually cause us to achieve things and solve problems together. And we're sort of lacking that belief in ourselves. But I think one thing maybe we learned about Zelensky is you know, his great response made us maybe believe in ourselves again and our agency. So, you know, there are finance sector matching corporate science-based targets pledges. Isn't this fantastic, science-based targets? Thousands of corporations committing to science-based targets and really good mechanisms for achieving that. And the net zero pledges are linked to that. There is benchmarking of so much of this from the CE100 plus. We have extraordinary capabilities. I'm not unfamiliar with carbon benchmarking organizations myself. What I would say is that the science-based targets and net zero pledges, they're linked in a great society-wide effort. Now, what else is happening? Extreme weather. Indeed. I don't have to tell you. The world's sort of the news story, number one, is kind of extreme weather. You know, the fires, the floods, people drown in their basements in Brooklyn and in trains in China. The public's moving on this, and that's very, very exciting. So we've got to recognize that this statement here, these net zero pledges, they don't exist in a world that isn't kind of on fire, literally and metaphorically, with their desire to solve these problems. And so, yeah, the children went on strike. I mean, think about it. Like, duh. The children went on strike. Things are super serious, and in that context, we have to look at these net zero pledges. We've got a grand alliance now of citizens. We've got finance, we've got corporations, we've got government scientists, we've got others, churches, the military, and that grand alliance is coming forward to say net zero targets for asset managers, asset owners, science-based targets for corporations in combination require science-based policy, net zero policy. And that's the heart of this debate. And I'm on this side of the aisle very, very proudly because I know that a grand coalition can deliver that policy. And the commitments to net zero are very much a part of the community saying they're part of that. Taxation, regulation, carbon border tax, all the rest of it. So let me be a little bit more specific about how this works, because we're talking about changing hearts and minds in society. We've done this before on a few occasions. You know, I'm old enough to remember when there was a proliferation of advertisers for jobs and such like, and they would say, equal opportunities employer. Were they? Maybe they weren't. But they communicated that they were equal opportunities employers, and it settled in society the basis of a debate about how we should be equal opportunities employers and how we need to be. You know, people respond in unusual ways in desperate situations. 2 weeks before Paris fell in 1940, the French and British parliaments passed motions saying all the French were British and all the British were French. Didn't really mean anything, but it was a desperate situation, and we recognize the power of symbolism in desperate situations to drive and build a force in society, a belief, a collective ability to act. So let's specifically get into the, so to say, real economy. You know, this idea that there's, how can I put it, no positive impact from the finance sector. You know, we know the enormous power of the finance sector to drive capital investment, to take it away from the bad and towards the good. How many revolutions in our society have been caused by this? The net zero proves that we're committed. And as you so effectively said, Anne, we're at the start of a long and very, very difficult journey. Now, I am going to fundamentally agree with many points that the opposition have made. You know, when you said a mandatory system is what we need, Desiree, you're absolutely right. Of course we do. But do we get that by not saying anything or not committing to anything? Do we get that by hiding behind some kind of corporate doublespeak, fearful that we'll be called out? Or do we make a bold commitment? Yes, we recognize the scale of the problem. We understand what the science means. And do we then offer up our net zero commitments to the public, to civil society, to be called out in future, to be policed, to be investigated? These asset managers, these net zero pledges are providing a basis for accountability. Are they a guarantee that accountability will be achieved? No, they're not. But they're a very necessary part of us reorganizing ourselves to move towards that. Sarah, you said government must get involved. Of course government must get involved. But I think If there's one thing I've learned in spending a couple of decades working with corporations and investors on climate change, it is that governments, we were discussing this yesterday, governments are in a kind of partnership. You know, essentially we need to recognize that the citizens kind of ruled by the government, but the government's kind of ruled by the corporations, and the corporations are kind of ruled by the investors. So if the investors aren't prepared to work with the corporations to allow the government to come back and perform its sacred duty, which is to protect the public, that's why we tolerate, thank you, that's the Greta applaud. That's why we tolerate having taxes pulled out of our pay packets at the end of the month unless we're a billionaire who's borrowing. We do that because we know that the government is there to protect us, and these net zero pledges allow us to build a coalition. So let me try and kind of bring it together by saying there is no elsewhere. You know, we said we need to look elsewhere, but how can there be an elsewhere but the finance sector? The finance sector is so big and so influential, we can't say it's not part of this. Its commitments are essential. And a pledge is not an easy way out, because a pledge is something you can be held to. It's a public statement of belief and commitment. And these pledges are therefore an essential component of any kind of accountability, bringing us together towards the taxation, regulation, and all the other laws we need to get the capital to flow to solve these terrible problems. Thank you.
All right, well, thank you very much, Paul. So it's going to be over to you in a second, so I'm giving you a second to get your courage up. You probably haven't had a drink yet, but we will be over to you. I just want to pick on something that Paul said. I think it is quite exciting to look at a gender-balanced group here, so congratulations to you. It's great to see a strong representation of women here, if not on the walls. Okay, so so we're going to start. I'm looking for a speaker from the floor to state their case in 2 minutes in favor of the proposition. Oh, yeah, sorry, okay. Well, all right. So to you, yeah.
Do it from here? Do it from here?
Would you like to come forward?
I would like to. So I've only got 2 minutes, right?
You have 2 minutes.
All right, so I'll be brief. First of all, I used to hear about kind of British fair play. Out the window. Look at what they did. You know, they gave a seemingly impossible task to the people supporting the proposition. They have a trained debater, Oxford grad, from the Oxford Union, leading this team of 3 people with a British accent. She derides the Americans and this poor German guy that nobody even seems to know who you are. So it's like, and I don't know, Catherine, if you were part of setting this thing up or Ben or whatever. So first of all, they've already tipped their hands on the scales, but I'm going to let that go. So I heard words like aspiration, pledge, commitment. It warms my heart. I love your passion. Your logic is fundamentally flawed, because what's missing? It's a simple word: accountability. Accountability. Who is holding the finance sector? Well, that's big. And oh, by the way, we probably have half of it in the United States, and it's all going in the other direction. So there's a practical political thing. Maybe my British friends should think about a little bit. Put that aside. All of these individual finance institutions, banks, asset owners, asset managers, insurance companies, some are public, some are private, where is the accountability? My colleague Ann complains about the need for investors to enforce accountability on companies. She complains about how they wouldn't be able to put directors on the slate. They could only, vote against them. But now we have all these, we need standards, and so there's all these mechanisms for accountability on the side for the corporations. I see no mechanisms of accountability whatsoever for all of these wonderful financial institutions virtue signaling with their net zero pledges. And 2050, it's a long time away. Thank you.
Tell us how you really feel. Okay, thank you, Bob. Good luck to whoever's next. Looking for a speaker from the floor to state their case in 2 minutes in favor of the opposition. All right, this is getting interesting.
Thank you, Madam Chair. Well, I learned one lesson early in life, which is never work with children and animals. The next one is never speak after Bob. So I'm going to do that. I can't believe that 6 weeks from my 70th birthday, this is the first time I've ever participated in debate. So quickly, in 2 minutes, it is clear that you have not read the motion which says pledges will have no positive impact. So the minute there is one single positive impact, you have lost. In fact, my advice to you would have been to spend 50 minutes behind the Speaker's chair before the motion, about 5:15, and try to get it to something like, will have little positive impact. And then we might at least have debated the motion, but they have clearly won. You clearly have no understanding of systems theories, because what has happened, I suggest, is that the net zero pledge groups have formed groups of like-minded individuals who systemically are going through the system doing the things which the fine opposition to the motion have described. I'll just give you 2 very quick examples I've been involved in. I recently crafted a clause in an investment management mandate where the asset owner said in this mandate, if you, the investment manager, look at the future green capex of an issuer and it's inadequate, they will be excluded from the mandate. So that asset owner was channeling real-world capital into a better place. And we had this sort of spurious divestment argument, which is sort of dead and buried. As an asset owner, I hold the equity to engage, and I may begin not to hold that company's debt because I need to give the message and move their activity on. So there is a much more nuanced argument about the slow removal of capital from other places. So there's 2 examples that I've been involved in, and I really don't fancy your chances. Thank you.
All right, so we're going to be looking for 2 other brave folks. So who wants to speak from the floor to state their case in 2 minutes, again, in favor of the proposition? Oh, come on down. Do you want to come down? Is there? I can get you. Here we go. No. Okay. Yay. Woo.
So the devil here is in the details. A lot of whether or not the financial sector is going to be able to make real impact with the net zero pledges depends on what they decide to do. I used to work in the stewardship department of an environmentally focused asset manager, and we used all of the tools at our disposal to push companies in our portfolio to make meaningful impact and meaningful changes with what they were doing. It meant we had yearly engagements with the highest emitting companies in our portfolios. It meant we filed shareholder resolutions every year. Big asset managers talk about, like, they'll vote on shareholder resolutions that require firms to file shareholder resolutions in the first place. Most of the largest asset managers aren't making the decision to be aggressive in how it is they are engaging their portfolio companies in holding directors accountable, in voting against directors, and filing shareholder resolutions in the first place. So if we go with the status quo, with the commitments that these financial institutions have made today, they're trying to not change the rules of the game very much and hope that they can make change. If these institutions are serious about pushing, change in the real economy, then they need to step up their game and what it is they're doing to hold the companies in their portfolio accountable, to hold the highest emitters accountable for real transition, for reducing their greenhouse emissions, and for investing where investment is needed in order to facilitate the emergence of technologies that will really facilitate this low carbon transition. So it depends on what these institutions are doing. What they're doing right now is certainly nowhere close to enough.
All right, so I have been informed. Thank you very much. That was great. So now it's over to you. Oh, look at that. We already have someone who's stepping up. But I've been informed that we're not limited to 4. So you guys that haven't, all of you guys who haven't said anything, and women, over to you next. All right, in favor of the opposition.
Hello, everyone, and this is a very, very easy debate. I've never participated in a debate where it's so much easier to be on one side, and it's already sort of very straightforward to argue, as the previous speaker for the opposition said, that the moment we prove that there is minimal impact, good, positive impact from finance, then we have already won this argument, because the proposition says there is no positive impact. And I think this isn't really a question of who should get involved.
What is the evidence of proof?
Declined. But thank you. I appreciate that we are getting more emotional and excited about this. But the moment we have the tiniest evidence, I think the opposition wins here. And I think everyone has a role to play. This isn't a question for the energy sector. It isn't a question for activists. It's a question for every single person in this room, including those in finance. And everyone has a role to play and cannot run away from their collective and individual responsibility. And it's not to say that finance will play the pivotal role. It's not to say that the energy sector will play pivotal role and who is more important here. That's not the question. The question is everyone can contribute, and for us to succeed as the human race, everyone has to contribute and hopefully will contribute. Thank you.
All right, I'll be buying drinks to everyone who participates in this. I think actually Ben is, but all right, so we have another speaker from the floor in favor of the proposition. The mic is, I think the mic's gonna come over. You're welcome to do it from there. If you'd like to come up and wander around a la Bob, you can do that.
Here. I actually think that net zero pledges are also having negative impact, because a lot of companies finance companies that are investing in, they themselves have pledged that they will be green by 2030, by 2050, by 2040. But in the interim period, they are continuing to pollute, they're continuing within their supply chain to go in their own business as usual. And because finance companies are investing in these, because the data is so iffy right now, just because a company says that they will pledge, they get moved to the sort of sustainable portfolios. And so finance companies that say that they're, with their net zero pledges, they say we have these many trillion going into sustainable finance. It's not actually sustainable finance. It's some is, but many companies continue to do business as usual, but their ratings become sustainable because they have pledged that they will be sustainable by 2030, 2040. So I feel that's creating disincentive towards actually contributing to sustainability. I don't know if that's...
All right, and we have another brave person, speaker in favor of the opposition.
Thanks. Hello, thanks. I'm very, very biased and conflicted, so I'll put my hands up in that I run the Glasgow Financial Alliance for Net Zero, GFANS, which have been mentioned. But I've really enjoyed everyone's rhetoric, and it's been very fun, but I'm going to be really boring and serious, so apologies in advance. In that there's a really serious point here, which is that things are it's true of buildings, it's true of everything. Things are very hard to build, and they're quite easy to pull down, but particularly in this environment, particularly in this political environment, and this year, things are much harder than they were last year. So I just wanted to make that point. volunteerism, this is about voluntary net zero pledges, and they are stepping into a space that public policy should be filling, that government should be filling. But public policy has not filled it, and it hasn't filled it for decades. So the question is it better that financial institutions are making these pledges and taking action to implement them, or that they don't? Because they're the two options. That's counterfactual at the moment. And then that is actually related to the next point, which is, does this volunteerism make public policy more likely or less likely? And I think we've seen from TCFD and SASB and CDP that it makes it much more likely. And I was involved last year in the COP26 team in trying to get the G7 to commit to TCFD mandatory and the foundation of ISSB, etc. And I can tell you that big financial institutions voluntary doing things makes government action much easier, much, much easier. And we saw that with the launch of the UK Transition Planning Task Force last year as well. I wanted to make a really boring technical point. So again, the proposition is confusing financed emissions reduction targets with net zero pledges. And the person from the floor, Bob, it's not about 2050. The whole financial alliances in the UNFCCC Race to Zero guidelines, they have to make public net interim 2030 targets and disclose progress against them annually. So you make an extremely good point. Who's accountable? Where does the accountability come from? Unless governments take action, which I think this makes more likely, the accountability comes from all of us, as savers, as NGOs, as there are regulators in the room. But with public commitments, public targets, science-based targets, most of the members we're talking about have set public science-based targets this year. That will be all founding members by the end of the year. They will be public, and annual disclosures against progress against them will definitely have a positive impact, in my view. And it's not just about finance emissions, it's about phasing out stranded assets, high-emitting assets. It's about positively financing. Okay, I'll stop.
Okay, so apparently we actually need to eat and drink at some point, but the good news is you can continue the debate while we eat and drink at some point, but thank you to everyone who stepped up. That's very brave, and you did a great job. Yeah. All right, we're getting to the end. I'm now going to turn to a third speaker proposition, Jakob Thomä, to close the case.
I may be German. I may prove inept at debating, but I can imitate English chivalry. Anne is right. I am the least. And I apologize that we decided to keep the least for last, which makes it, frankly, even more amazing that the opposition thought they had a chance. I think what this debate has shown beyond reasonable doubt is that real-world emissions commitments by financial institutions lead to real-world emissions reductions. Net zero commitments are a brilliant idea. Penalties, reputational or financial in case of non-compliance. The opposition has convincingly proved its point. The thing is, we all know. You know, I know. The discussants on the other side of this motion know that the reality that they describe is not the one we live in. What we have heard so far from our friends on the other side of this debate has been a fantasy story, an entertaining one, admittedly, but a fantasy nonetheless. This does not serve us, this fantasy. We have aspirations, sure. They might as well be my letter to Santa, my New Year's resolution when it comes to the accountability that Bob so eloquently highlighted. We might as well debate the motion, whether New Year's resolutions lead to people changing their behavior. The opposition would have a similarly difficult task. They tell us that these targets drive institutional transformation, but the evidence they provide is prayers and thoughts and wishful thinking. And to be clear, we do not engage in the nullification of the idea that change is not possible. We simply posit that these are not the droids you're looking for, that this is not the source of this change. Let me remind our audience, too, that the burden of proof in this debate is not on our side. We don't have to prove that these targets do not work.
They have to prove that they work, and Mike is wrong. It's not just a question of reducing emissions. They're every day increasing emissions. It would have been a fairer motion to argue whether GFANZ is just keeping the boat steady. We could have the motion that GFANZ is increasing emissions, and I would posit we would win it too. What's worse, these targets are no free lunch. We can measure, they cost. Unlike Alex suggests, they bamboozle governments into thinking that the private sector is going to take on some of the burden. They create marketing benefits, and the roads of these targets, and Anne should know very well from her long experience, is littered with broken promises and broken dreams. For now, when it comes to climate targets, finance institutions have given the public a bad check, marked, to use the words of Martin Luther King Jr., insufficient funds. But don't believe me. Let me quote to you the words of the target frameworks themselves. The get-out-of-jail card, the staring contest financial institutions have effectively engaged in with government. What is this get-out-of-jail card, you may ask? This commitment, and I quote here from one of the pledges documents, is made in the expectation that governments will follow through on their own commitments to ensure the objectives of the Paris Agreement are met. Honestly, I beseech to my fellow discussants to explain to me, what is the point of that? We reduce financial institutions, and again I quote here, we raise government awareness and make the business case. That's the language from the target setting protocols. Net zero targets have been reduced to a public service announcement. And do not get me wrong, I'm on board with the announcement, but pardon my cynicism that I don't immediately ascribe the transformation potential that my counterparts seem to identify in Harry Potter's Room of Requirements. For those less well-versed in the Harry Potter lore, and I believe we're actually at Harry Potter school here, the Room of Requirements is the room that looks however you want it to look. This is the mentality here too. Financial institutions can realize real-world emission reductions and make profits and satisfy their shareholders and stakeholders and Ted Cruz and Mike Pence and whoever, and unicorns fly in the sky. We may be in a fairy tale place here in this venue, but this is a step too far. These buildings Alex talks about, they are castles in the sky. There's nothing for us to tear down, because there's nothing there. If the global economy will be net zero by 2050, and we all hope it will, so by all accounts will I. I'm surprised I didn't get an applause. So will you. What are you doing, wasting your time not setting targets? Call the Financial Times. We are all setting targets. You get a target, you get a target. Everybody gets a target. Look under your chairs. Of course, once you step out of line and call out the problems, you become the target. We are all in this room and beyond in a streetcar named Desire. And I understand why. We all want to believe. I want to believe. I want to be on that side so badly. But this streetcar that they're asking us to join is not going anywhere. Behind the wheels, governments of this world, they haven't driven very far, we all know that. Now our friends setting net zero targets are sitting on the passenger side of their best friend's ride. For the past year, and this will be a reference to only some of you in this room get, for the past year they've been trying to holler at me. We are going to Paris, they shout. That's what the driver just told me, apparently. We'll be there by tonight, or to be more precise, in 30 years, apparently. But they won't, will they? Let's be honest with ourselves. We know governments are not on track to drive us there, and so our financial institutions just sit there and tell us, well, we just said we'll be there if the governments are going there too. They're sitting there with their party hats and foam hands cheerleading governments along, and unlike Anne will have us believe, they are not steering. No. They are not steering and they are not driving. The best we could hope is that they're standing behind the car pushing it up the road, and that is not a way to get to Paris. They will have us believe they have a plan. Their plan is about as developed and nuanced as that of my 3-year-old strategy to postpone his bedtime, a mix of shouting, kicking, and informing me earnestly that he can fall asleep while watching Peppa Pig. That, my friends, is not a plan. Even if that were true, and it is not, our driver is taking the foot off the pedal, ready to believe that good vibes alone will get us there, aspirations. By all accounts, the only difference between the scrubs of TLC's timeless classic and our net zero target setters is that one of them is broke and the other one isn't. Always talking about what they want, never walking the walk. And even when they do, the mental gymnastics are just hard to believe. My discussants demonstrate this more articulately than I can. But let me remind the House. Sarah highlighted the shortcomings of the deck chair moving on the Titanic. And Desiree gave us a tour of the wild, wild west of lack of tools, standards, and willingness and ability to measure what we are really debating here today, real-world emissions reductions. I close with this. We were all today in the illustrious examination halls of Oxford. Many brilliant minds have walked through these doors, all of you. Too many to count. Some of you have even studied here and perhaps taken your examinations. But as I close my arguments this evening, let me cite a particular erudite thinker of her time, an Oxford alum, the English TV personality, hobby chef, and celebrated best-selling author of cooking books, Nigella Lawson. If you do not know her, please watch her show. It's a treat, pun entirely intended. Her insight into the world of cooking rings equally true for the debate today. Nigella teaches us, and mark her words, I don't think you can ever really cook unless you love eating. I will spare myself the joke about my English friends who love eating but can't cook. But joking aside, it's worth pausing to appreciate the truth for a moment. I don't think you can ever really cook unless you love eating. And ultimately, that's the problem. Financial institutions, they do not love eating. They do not love our planet more than their money. And so they can't cook, they can't, through voluntary targets arising now, contribute to real-world emissions reduction.
And I always thought Germans were such dull speakers. All right, so now to third speaker opposition. To close the case, Hugh Van Steenis.
Thank you very much indeed. Good evening, ladies and gentlemen. It's been highly entertaining for us on our side to listen to the wisdom, but fundamentally misguided views of the proponents of this debate. As we think about it, we think their arguments fall into three: the good, the bad, and the truly irrelevant. And I'm going to try and pick up on all three of those. But first, I think, before we unpick, I think there is one fundamental backdrop where I think we probably do have some agreement. It's a low trust environment between finance and society. The trouble is that we on our side are looking to bridge that lack of trust rather than demolish it. And I think this has been something throughout history. So if you go back to the Second World War, when the local selection boards were considering who they should draft, they were given a memo by the State Department saying, we need to think about which jobs are the most socially useless. And if you look at the lists back from 1940, it was bankers, real estate agents, and hairdressers. So, that lack of trust has been with us for some time. Maybe we should have added Tory MPs, but, but we really think that it took a generation for bankers to be rehabilitated. And J.K. Galbraith in the 60s had a wonderful comment where he was asked, what's the definition of a banker? And he said, well, as I look in the dictionary, it's between backhanders and bastards, and I think that's probably all we need to say. So there's a real challenge here, and we on the finance side need to bridge that gap. But if I look at their arguments, I think there are three. So on the good side, I think Severa made a good point that finance commitments alone won't do it. We clearly agree. But what they're missing, as the gentleman from GFAN said, is these net zero commitments are additive, and they're adding to all the commitments that the states have made. Not only have we now got 450 banks, insurers, asset managers, and asset owners representing well over 100 trillion of assets, but also we've got many corporates being held accountable. Bloomberg NEF suggests that net zero targets from large corporates now represent 25% of all global emissions. These targets are meaningful and are real and are ones which we think are important. And without these commitments, we can't then deliver on the public-private partnership we need. Just to try and work through energy transition, we need a 7-fold increase in investment. Again, on Bloomberg data, an additional $1 trillion to try and help that energy transition, or near a $3 to $4 trillion for a whole economy transition. Now, what I thought was interesting earlier this afternoon is Nicole argued that finance is running well ahead of policymakers, and I think she's right. And I think that's what a key point that the proponents of this debate are missing. The bad. Well, maybe I should turn to Bob first. When I think about a bad argument, he says we need to hold finance accountable. If there aren't any pledges, you can't hold them accountable. So the key point... So we now have commitments by 450 firms. You may not like them, Bob. Sarah and Desiree and Jakob may not like them, but you've now got something to work with, and you can start the ratchet. And certainly when I was working and serving with Governor Carney and designing the climate stress tests, the number one reason we did that was to try and get the ratchet going, to try and encourage them to collect the data, to develop the risk management frameworks, to get the standards so that you can start to have risk and climate metrics being considered business as usual rather than a fringe topic. And so I think that's wrong, and I can see Saskia from the Dutch Central Bank in the audience. You know, she, Bob, is going to hold us accountable. The central banks, you need to understand, particularly for the banks and insurers as regulated institutions, when a central banker says jump, they jump. And I think that's a key point, I think also the proponents were missing, I think, from the proponent side tonight. These commitments are serious. They may not be as heroic, they may not be as ambitious as you want, but that ratchet has started and will continue. Another argument I think was bad from the other side was, you know, governments need to lead. Well, as Nicole said earlier, actually finance is ahead of where the governments are. We need the governments to set standards. Well, that's great, but where are they? Take the EU taxonomy. Our host today, Ben, wrote a brilliant piece on 10 reasons why the EU taxonomy won't nudge finance. And that's because it's thinking just about the greenest and purest of green, rather than the whole economy transition we need. Take in the bank space, the green asset ratio. The methodology is bizarre and wouldn't pass any Oxford test. On the numerator, half the balance sheet is excluded, according to BNP. Loans to small businesses can never be included. Loans to governments can never be included. Loans to green companies overseas, so a loan to Tesla, cannot be included. The rules which are being set up here aren't fit for purpose. And so I think that we need to have standards where the public and private come together to try and think about the greening of that area. Sorry, was there a point of information? Sorry? Yeah, I'm happy to, please do.
Information on SME can be included on the taxonomy, and financials can take their own decision in that regard.
So, okay, thank you very much for that. Actually, for the green asset ratio, that's not true. If you look at the 197-page document issued by the EBA, actually, in the green asset ratio, you can't. But I appreciate the taxonomy is a voluntary, well, it's set up originally to be voluntary, but it's become mandatory. The guidance given to the banks where it can't. But I appreciate the intent. But these are the issues. You need the public and private to come together to work on this. Some of the arguments the proponents gave also weren't even about net zero or banks. So Desiree mentioned, for instance, Sarbanes-Oxley. We all want CFOs to be sent to jail if they misrepresent their accounts, but it has nothing to do with banks. This was to do with Enron and the response to Enron, not to any other banking scandals. So I think we're missing sometimes the areas. Now look, Anne is the debater here. When I was here, I never debated, and I think it probably shows. But Anne very beautifully laid out that finance now has a destination. It has a compass, it has some of the tools, but really we're only really on that journey. The first was to try and get the commitments. Version 2.0 is to then develop the metrics, the standards, the toolkit. And number 3 is to operationalize. And then it's your job and our job to then try and ratchet and hold these firms accountable. And obviously, including Ben and his team doing some great work to try and actually look, what is happening to the cost of capital? In fact, actually, one of Ben's studies shows that the cost of capital to coal firms gapped out over the last 10 years, whereas the cost of capital to the energy companies on bank loans, again, has come in. So the real-world data is supporting that these pledges and commitments are having a material impact. But I think where we all agree is that once you made those pledges, you need to turn them into reality. And I think we do agree with Sarah, this has to be operationalized. But again, Sarah mentioned we should stimulate more venture capital. We should stimulate more transition finance. When you look at some of these large banks which have committed, that's exactly what they're trying to do. One of the proponents talked about JP Morgan. They're committing $2.5 trillion. 700 million of that is towards green finance. I know there's a friend of ours from Citigroup in the audience. I could go through. Each of these large firms are committing over $500 billion to green finance. And therefore, these commitments, again, you can hold these firms accountable. So I think pledges on the whole can add and really support. Now, I realize I'm the only thing which stands between you and your drinks this evening. So I really need to sort of, sum it up here. I think the bottom line for Anne, Paul, and myself is that net zero is net positive. I want to thank the other side for so valiantly arguing something they simply don't believe in, as we heard beforehand. But the bottom line is 450 firms, financial firms, have committed to net zero when hang on, it is because I'm in my last closing. It's actually more than 450 now because some of the insurers have added to. But when 3.5 years ago, it was less than 30. This is a huge progress. So from my point of view, and certainly from Anne and Paul, a vote for the proposition is vote for being an ostrich, putting your head in the sand and saying that actually the private sector can't actually change. A vote for the proposition is voting for the perfect rather than making good. We live in the real pragmatic world of trying to make progress rather than trying to believe in a fantasy. And a vote for us, for the proposition, is also one to try and assume that shareholders and regulators won't be able to hold the financial system for account. On the other hand, a vote for us, or for the defence, as Anne said, is a vote for common sense. These are real-world pragmatic targets. A vote against, as Paul said, is a vote for pledges which organisations such as his can then hold them accountable to. And a vote for us is ones with a plan. So I ask you to support us in opposing the motion. Thank you very much.
Well, thank you very much, Hugh. But I want to thank all of the speakers. A huge round of applause. However, there has to be a winner. All right, so now we're going to turn to a vote. So voting will be done by a shout of A or nay. You ready? Can do this. Don't hold back. All right, those who support the proposition say A. A. Is that all you got? Okay. What? Good idea, good idea. I will read just so we are clear of the motion and how you're voting. That's a good idea. It's been a long day. This House believes that finance sector net zero pledges will have no positive impact on real economy decarbonization. Got that? Okay, we're gonna start again. Those who support the proposition say A. A. Oh, okay. Those who oppose the proposition say nay. Nay. Ooh. Well, it was not that close, although everyone did an excellent job. The nays have it. The opposition does win the debate. I guess I won't declare how I feel about that. But anyway, a huge thanks to everyone. A huge thanks to Ben. And I guess over to you, so you tell us how we eat and drink. Yeah.
Thank you so much, Catherine.
Oh, you need the mic. The mic.
Online audience later. Okay, that was so much fun. Great participation. I have to take responsibility for the motion, and it was crafted to get the most out of the debate, I think, and get people riled up, and I think it managed to do that. And we'll continue the debate over dinner. So it's been a fantastic 2 days. Really want to thank you all for coming. I've got some thank yous to go through before we head over to the dinner, and I'll tell you how we do that. Obviously I want to thank all the speakers, the chairs of the sessions. I want to thank our sponsors and supporters, Persephone, MFS, and Ethos. Really big thanks to the catering teams at the and the staff at the examination schools here at the Sheldonian, the Divinity School, and also coming up at the Ashmolean. Also a big thanks to the AV teams who have been covering all of this, recording it so diligently and hopefully successfully, I'm sure it will be. And to the photographers, so John Cairns and his colleagues who have been taking lots of lovely pictures. So after the event, you get to see lots of pictures. We have a big home team who have been working on this. So we've had a number of student volunteers who I want to name, shout out to. Yana Everett, Safa Fanian, Shivani Satyathi, Paninda Thind, and Dennis West. So thank you to all of them. Big applause. The sessions have been also organised by a number of members of the team. So again, I want to name these people: Moritz Baer, Christophe Christian, Jose Garcia, Felicia Liu, Julie Luanko, Kevin Tang, Natalia Tachenko, and Christian Wilson. So big thanks to them. And then 2 final thanks. So one specifically for Jimmy Jia, who has been playing a really key role throughout. Thank you, Jimmy, for all of your hard work. And finally, Patricia, who many of you have corresponded with. She's actually, I don't think she's here. I think she's gone to the Ashmolean to help set up. So, no, she is here. No, she's not. Okay, well, big round of applause for Patricia, because she gets to see the video. So a great team, and many of those people are going to be working on the summit next year. You've got the dates, 19th to the 20th of July. Book your flights, book your transport, book your hotels. Now, that is pretty much a wrap. So we're going to go to the Ashmolean. The Ashmolean is the oldest museum in the UK, the oldest university museum anywhere in the world. And it is a wonderful place to have dinner. And then if you are so inclined, there's going to be an after party in the vaults of this museum with DJs, with vinyl. So please stay and enjoy. Thank you again.
That was great. Thank you. That was great.